Hi, everybody. This is Gary Dean, and this is our weekend video report for Sunday, March 20th, 2016. So, Friday, we saw the Bulls continue the run. It's as frustrating as it is, there's also, reasons to continue to be a little bit cautious. I know I continue to say that, but there's just some of the breadth charts that I've been showing. They're at extremes right now. And there's not really that many people that are looking down. A lot of people are looking up. A lot of people are calling for new highs. And this is pretty much when you get these counter trend rallies off it, that's within, say, an overall bear market. This is how it does it. And then what happens is they run out of buyers. They exhaust themselves because they don't take any breaks. And then from there, we see a move to the downside that accelerates. And in the past, it's been anywhere from 2 to 3 to 4 times faster than when it went up. And we saw this. And sometimes what's going to happen is tops are kind of a rounded top, and the bottoms are V bottoms. That's just the way things work. So even when we get the first drop like this, most likely what is going to happen is we're going to get a counter trend bounce, and if it doesn't take out those previous highs, that's when things accelerate to the downside. And we've seen it each time, and even when it takes out the highs or comes up there, is if it doesn't break through and continue up, that's when we start getting the moves, that move to the original direction of the market, which, as we've seen since all the way going back into, actually we could even go here, back to May of 2015, we had these big moves up, but it never took out the previous highs. And same thing that goes with this. We had a huge move up, but it never took out this high. So that's why it's considered a bear market or a downtrend, because each big bounce that we get, we're not taking out the highs. So this is very similar to this move right here. I showed you the the time and the price, and that's what this yellow box is. You can see we pretty much came right up to there right now. This is also the trend line right here. So if we are going to, get some kind of pullback, it could start, as soon as tomorrow. Maybe they give a little head fake move up and then down. But we are in areas right now where we've seen the move start to the downside or the buyers get exhausted. Now, we have bearish divergences on the daily chart. We are now in overbought levels. And we're also at important trend lines right here, as well as time and price. So this is one of the reasons why, I was expecting that we could get some kind of pullback at any point. Each one was getting bid back up. But as they do that, we just see things get very, very extended. So if we look on an hourly chart here, again, these bearish divergences have been in place going all the way back to really, it started in February 2017. We're still in the bearish wedge, and we got a breakthrough and overthrow, which is common. But this pattern right here is actually looking for a move to come all the way back down to the 1931 and possibly even all the way down to the 1891. Now, that's just the pattern that's in place. Now, also, I showed you the time and the price on the daily. If we go to a 60-minute chart, and what we're looking at is we are now at the 78% retracement, and that's 2051. So it's also resistance up here as well as a 78% retracement. And typically, when you get counter trend moves, 78% is usually the number that it tries to reach to before it continues the move to the downside. Now, if it was in an uptrend, the 78% would be where we make a bottom and then it heads up. So it's pretty important as far as for the bears, if they are going to try to push things down, which I believe they are going to. These are the areas that they need to start stepping in. So 2051 is important. If they try to gap up, then they may be able to get up to the 2067. But like I said, the overbought levels on the daily chart, as well as the bearish divergences, it's going to be tough to keep it sustained if they do try to break up. But really, the important thing, what the bears have to do, is get it through this 2008, and then let's just say the 2008. That's the support level right here, where If it breaks through, then we're going to start to see some acceleration. And remember, we still have this open gap all the way down here. So 2019, most likely we will see some buyers step in because they just seem to be buying the 50-day moving average on the 60-minute chart. But again, the important line in the sand for the bears is to push it through this right around the 209 to 208 area. If they do that, that's when I believe we start to see some momentum pick up on the downside. So here you can see we're getting pretty close to the moving average right here. If the bulls lose this right here, we have this trend line that's sitting right around the 2038. This is going to be what they need to work through first to see a move down to the 2024, and probably the earliest, say knowledge that things are starting to roll over is again this 2009 area. If they do that, that's when I believe that we see a magnet move down to the 1968. And again, we have bearish divergences on the hourly chart, on the daily, and now on the 15-minute chart. So if we take a look at the Dow, again, it's just in this really massive rising wedge right here. We had the bearish divergences going in place. This one kind of popped it up with this move right here, but it's still very, very overextended right here. The 78% retracement for the Dow is 17,727. So this is going to be a natural resistance area here if the Dow tries to go up. But again, the pattern is something that if you're a bull, you can't relax on. Even though the price has been, staying strong and we haven't seen any kind of breakdowns, when you get these sustained moves that just don't take any breaks and they start building these bearish divergences and bearish patterns, you just got to be really, really careful, because everybody thought this was, the lows were in here and we were making new highs, and before we knew it, we took these lows out. It's the same move that we're seeing right here, and when it's nonstop pressing to the upside, once it gives up, it gives another try up, and then from there just heads down. And right now, from what I'm seeing, I don't think this one's going to be different, even as frustrating as it is, on my side, thinking that we were going to have a pullback much earlier than this. I still believe that we have, this is going to break to the downside, and it's just a matter of when things start to play out like that. And like I've showed you, I think this could take place any single day. But it's until we start seeing price start breaking support levels, the bulls remain in control. But it's just one of those things that we are, probably as overextended as we've been in 3 or 4 years. So it's something you really don't want to relax on. And, that's about all I have. We have to just wait for, this to start breaking down. I do believe it's going to. And when it does, it's going to accelerate probably a lot faster than people are anticipating. So with that, enjoy the rest of your weekend, and I'll talk to you guys tomorrow.